FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 6/10/19. Well, rate cuts coming shortly, faster than you thought? Could be. Hey, as always, you're thinking about rates, send me an email. Tell me what you think the Fed's going to do. If you get the closest within 10 basis points of where they cut the rate, I will send you a pre-1965 silver dime, which is worth, I don't know, a couple of bucks right now. I haven't tracked it. It's worth a little less than it was, but probably close to $2 would be my guess. So KL@kerrylutz.com. You hit the Fed number, what they cut to, what you think rates will be after next week. If you're close to it, you're the closest, you get a free pre-1965 silver dime. I think there's 70% silver or 90% silver. I don't remember exactly. I used to know all that off the tip of my tongue. But in any event, where are we heading here? Should all experts be terminated from their jobs immediately, especially economic experts? Because these experts are never right. They're always off. They never get it. And a little bit disconcerting. Well, hey, one expert we have on who is always right, or pretty close to it, David Erfle. And David, it's always great to have you on. And we would be remiss if we didn't mention your august publication, which is juniorminerjunkie.com. That's like a couple of J's in there. David, it's great to have you back on.
Thanks. Yeah, it's Junior Miner Junkie with a Y.
Yeah, with a Y. I should always emphasize that. Yeah. Hey, so recently writing an article where we had an unexpected rally. I'm sure the experts were not expecting a rally in gold. Might be over now. It's down $13 the ounce right now as we speak, but hit up against the very close to the 1350 resistance point, pulled back, but then did something funny last week. It added $5-10 a day for 3 days in a row. And now here's Monday, it's down $13. What is going on here?
Yeah, Kerry. Well, it was a fun run. We had like an 8 straight session where gold went up about $70, and what ignited it was toward the end of May there, when Trump announced that he was going to put some tariffs on Mexico. That was the spark that ignited it, and now the spark that ended it was Trump making a deal with Mexico. But what happened in between there was more important, was basically the market beginning to price in Fed rate cuts. That's a big one, because the last time the Fed cut rates was in 2007, and the gold price began a 32% run 2 weeks before the actual cut came in. So I think we're going to see a rate cut here pretty soon, and the next FOMC meeting is on the 19th. And I'm not expecting them to cut then, but I'm expecting them to prime the market for a rate cut. And that's what the market is hoping for, because that's a big reason why we're getting a bounce here. We're getting a lot of short covering coming into the equity market.
Hey, and that makes a lot of sense. I knew there was going to be a pullback. Look, it's just normal when something pops up 7%. It's going to come pull back a little bit. And if the rally is legitimate, then it'll pull back, consolidate, and then move ahead again. We're a little too early in the game to know this. And seasonally, this isn't the best time for gold. I mean, it's not uncommon for you to have this beginning of the summer rally in the metals and then a pullback very quickly and then doldrums until mid fourth quarter, right?
Exactly. But on the other hand, this sector loves to catch people off guard when it starts a big move. And nobody's expecting a big move right now. We have that Maginot line of defense in gold from 1350 to 1375, which has been tested so many times. I think 6 times total.
6.
And I think the 1350 area has been tested 8 times recently. So, Yeah, this is a very strong line of defense. So, and it's also lasted about 6 years.
Yes.
So once it finally breaks, it's going to be very interesting to see what happens.
It's going to be violent. When it breaks, it's going to break violently. In all likelihood, it will break at some point. And obviously, we've got this protracted base, and we've got the ascending wedge there. So all these things bode well for metals. But, like you said, it's going to do what it's going to do. And the experts are always going to be caught flat-footed, surprised that anything could happen, right? Amazing. How could this happen?
Exactly.
Yeah. So it's crazy. But we've seen it before. This isn't anything new. So when it starts going up, certain companies out there are really going to respond and really go up, aren't they?
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Exactly. And what's happening, what happened last week is what happens when these things start to move, especially when people least expect it, is short covering begins. And that's why you see the miners and you see royalty companies have a big move first, and the juniors don't do much, especially, like, as you said, it's happening at a time of year when nobody's really expecting it. So a lot of these juniors are still sitting there doing nothing. So I don't expect them to move until gold gets solidly above that 1350, 1375 area. Then some of them are really going to take off like scalded cats. You just got to make sure that you're in the right ones, because there's still a lot of garbage out there that needs to go away. And if this sector does begin its next big leg upwards, unfortunately, a lot of that stuff isn't going to go away. It's going the lights are going to be kept on with some financings, but as long as you're in the right ones early before this breakout comes, you're going to do really well.
Hey, so what's your take, David, on financing in the mining sector now? Has it gotten a little easier as of late, or is it still very tight?
It's still very tight. There's not a lot of money out there for a lot of these companies. So that's why you really got to make sure that if you're gonna invest in these companies that need to finance to keep going, and let's face it, most of them do. The ones that aren't producing, they all do. You got to make sure that you're in the ones that have a good share structure. They have a solid management team with a track record of being successful in the past, and they have access to capital. That's the main thing, because you don't want to be stuck in something that needs money. It's trading at a really low price and has to dilute the farm basically to get just a small financing done.
Yeah, absolutely. And we see that over and over and over again in the sector. All of these non-brokered financings, private placements, and the stock will be, every time they do it, the stock's diluted another 10%, till pretty soon you have nothing. But I have the reverse story. One of our clients, Trilogy Metals, right? Great company. They've got an amazing project up in Alaska, and the political tailwinds, everything is on their side. And I watched Patrick Donnelly, the VP. He's a GO in charge of corporate communications. I think he does everything in the company, honestly. It's a very lean company. And he's addressing a group of investors in Boca Raton, Florida, well-heeled investors. And he says, hey, I'm not here to ask you guys for any money. And I'm telling you, these were like hardcore seasoned investors. And they practically fell off their seats. It's like, well, we've had many hundreds of companies coming through here, and he said, no, I left the charity can in the office. We got 30 million in the bank. We've got 10 million worth of in the money warrants that are going to be exercised this year. and there's a JV agreement with South 32. So if they want to do it, they have to do it by January of this year, and they have to they have to pay us $150 million. So we don't really care about money. We just want to improve the visibility of our stock and the awareness of our company and what a great investment it is. And that's like the best sell in the world, you know?
Mm-hmm. Yeah, and that South 32 agreement, the market sees that South 32 agreement and they think buyout. So
Yeah.
that's a big reason why this company has kept rising from the lower left to the upper right, while a lot of these other copper companies are being killed by the copper price.
Yeah, exactly. The copper price right now, it's down another nearly penny and a half to around 263, but they've got a lot of gold there. They've got more zinc in one area of it than they do copper. They've got silver, and really they call it trilogy metals. They needed to call it the septametals or something like that, or octametals. There's like 8 different types of metals. Cobalt, they've got 77 million pounds, they estimate, of cobalt in one of their projects there, which is like, we can't get enough cobalt. We're in supply deficit for cobalt. And it's
Right.
it's a really great company, with really good management, and really the company knows how to work in Alaska, and that's a whole nother world. So when you look at companies like that, and then you say, wow, if metals prices really come along a little bit, go up 10, 15% for the year, we don't need a lot more than that when you think about it,
Right. Mm-hmm. Exactly. Yeah, it's still, I've been saying this for a while now, but it's still the last deep value play left in the marketplace. Everything else has gone up during the everything
Right.
bubble, and miners are sitting there trading basically where they were trading back at the depths of the 2008 financial crisis.
Yeah. Hey, between, like the ones that have done real well, the royalty plays, at least they haven't gone down much. They've gone up a little.
Right.
They haven't, the worst performers haven't gone down much, but the royalties have done exceedingly well. But the rest of the sector has been left for dead. And I had a talk with somebody at one of the junior miners recently, a prominent one, and he said, nobody covers our stocks anymore unless we need to raise money from an investment bank. That's the only way that our stock ever gets covered. Otherwise, they're left for dead. And that's a tremendous opportunity for people like you, David, who can shine the spotlight on these companies and show the opportunities that are available, because Wall Street has effectively defaulted on one of its primary duties.
Exactly. And remember, if you take this entire sector and put the market cap together, it's still less than 1% of the broader market. So this is a tiny, tiny sector, and this is the time you need to be doing the work to identify the right companies and get into them early, take a position, and just wait, because we know it's going to happen. We just don't know when. It looks like it's going to be sooner now with the Fed giving us a hand about having to cut rates. So it's going to be really interesting. It's going to be a really interesting June, July time frame for the juniors for a change, because like we said earlier, it's usually a very boring time. And I think this year it's going to be interesting, and all it already is.
Oh, yeah, it's definitely interesting. Hey, one other thing, besides the Fed cutting rates, because the Fed's been out of touch with all the other central banks, the ECB, China, and Japan. It's really been out of touch. It's been what I don't want to call it a bearish or hawkish scenario, but it's been a mildly deflationary one, whereas everyone else has got the floodgates open. And that leads us to China. Their banks are like ready to roll over. They've been liquefying. And it seems like as quick as they print the money up, it goes into a black hole.
Right. Yeah. And what the thing to look at too is the dollar index. The dollar has held up really well through all of this. And but if you look at the chart, it's got a bearish ending diagonal on it, and it's starting to break down from there.
Mm-hmm.
And if it gets below its 200-day moving average, there's a lot of room for it to go lower. And the Fed actually cutting rates might tip it towards the scales down there. So we need to keep an eye on the gold on the dollar chart. And also, we need to keep an eye on the large gold companies like a Newmont. Take a Newmont Gold Corp, which accounts for over 7% of global output of gold production now.
Yeah.
And their chart is starting to look really bullish. If that chart breaks out, and it's getting very close to breaking out, that's a bellwether for the sector. So you want to see Barrick and you want to see Newmont doing well. So once those charts break out, that'll bode well for the sector also.
Hey, and let's not forget that when there is a breakout in the sector, it's almost always the big guys, the big companies, the majors, as they're called, referred to. They're the ones that get the initial jolt of caffeine or steroids. And then the rest of the market, if it's real, will follow suit. So that could be your indicator that when Newmont breaks out, then, or Barrick too, for that matter, that then it's time to take a real close look at the juniors.
Exactly, because this is what happened in 2016. And when you have a depressed market that's been so depressed for so long, it's the short covering that always begins the moves higher. And there's a lot of shorts in a lot of these major mining companies because let's face it, they've been terrible investments for the past 8 years.
Yeah, and you know what else there is? I would say, like, if you own mining companies and you write covered calls, I mean, it was just a way to steal money for the last 8 years because, with the exception of 16, you never had to worry about exercise. You just took the premium and you sell them out of the money, 2 or 3 steps out of the money, and boom, you just make money off of it. I've known people, good friends, who have done this. Sorry I wasn't one of them, but it's really simple, right?
Right. Exactly. Yeah. But on the flip side of that, if you look at these juniors, I mean, we know that the major mining companies have to replace their high grade ounces.
Yes.
They're running out of high grade ounces to produce. They have to replace them. Beginning to consolidate. Mergers and acquisitions have begun to heat up. And if you take a close look at some of these juniors, that you could pretty much pick out which ones are going to get taken out next and take a big position in them and just wait.
Yeah. It's pretty obvious, isn't it, which ones are going to get taken out? How do you, how best do you tell? I mean, obviously they've got real reserves. They've got gold in the ground for real, right?
Exactly. Yeah. I mean, you just got to make sure that they have a large land package in a good jurisdiction with a lot of blue sky potential on the project, on the deposit that they've already proved up. And make sure that the management team is really solid. They have access to capital to keep proving it up. They haven't blown out the share structure too much while doing it. And I really like the deposits in Canada right now because you've got a Canadian gold price that is very close to breaking out to an all-time high, and you've got a Canadian dollar that's very depressed. So
against
they're
the
paying
US.
the workers in lower Canadian currency.
Yeah. Isn't it great? You're watching this and you can't believe it, but it's going to happen. And like for Canadian producers, they pay all their costs, energy, everything else in Canadian dollars, but they're selling, it's so weak against the US dollar. I just sent my webmaster a payment and it was, what was it? 128 per, each US dollar bought $1.28 of the loonie, which is like, I'm looking at it, I'm saying, wow, that's pretty freaking amazing here,
Right.
And he's happy about it, seeing his currency devalue because he's not as aware of the inflation as it might otherwise be if markets were functioning normally. And, it's a fun thing to watch. It really is.
Yeah. And this is why the Australian, the ASX has done so much better this year because the Australian gold price is already at an all-time high. And you've got all these Australian miners coming over into the Canadians' backyard and buying up the project.
For sure. Like South 32. So, although that's an American play.
And St. Barbara just buying up Atlantic Gold, which was my largest position. And it was a cash offer. So I was very happy.
Atlantic Gold, a great company. They're producing and they had a lot going on there. So that's, Yeah, they don't have a choice because Newmont, Barrick, they might say they have exploration and development departments, but you and I both know they really don't anymore.
No, not really. And they've also announced that they're going to be divesting. So you got the two largest gold miners in the world divesting at a time when Australian miners are coming over here and buying up projects. Not here, but Canada.
Yeah, and
I'm in the U.S.
yeah, right, exactly. And the Australian miners are some of the best in the world. They're state-of-the-art, leading technology, best practices for mining, environmentally and productivity for when it comes to pulling, strip ratios and pulling, the maximum out of the project. They really are top-notch operators. And
right. Just the ASX is a little more Wild West than the venture, and their share structures are mostly blown out.
Oh, so yeah. They don't know from shares. Like, share structure is an alien concept anywhere except the United States. You notice that?
Right.
They just don't care about it.
Exactly.
That's why they keep diluting, because it's like these are all back of the envelope deals, it seems, where it's like we need money, right. And they happen over a dinner in someplace in Vancouver. That's where the deals get done. Right?
Exactly. Right. Backroom deals. Yep.
Yeah. Well, hey, but that's the way the business works. And now it's drilling season. Now we get to see who the winners and who the losers are.
Right. Yep. So place your bets, and the results are going to start to come out here in July, and it's going to be really interesting to see how some of these follow-up drill programs pan out, and some of these really hopeful ones.
I think we're going to see some amazing things, and I'm not just talking my book here. I really do think that that this year we're going to see some major strikes, because they just haven't been able to do as much as they're going to be doing this summer. So,
right,
we will see about that.
Yeah, well, that's what this sector needs is a major discovery. That would help bring some of the generalist investors into it. That's for sure.
Yeah, and I have a feeling I know where one of them is going to be coming from, but it's client. I don't want to make this like all about pushing my clients, but one of them in particular, if they hit this summer, it's going to be Katie bar the doors. The stock will go up many times very quickly.
Yeah, I've got one of those myself. I'm crossing my fingers on.
Yep. Yeah, we know. So, hey.
Yep.
So, anyways, what's up on your website these days?
Well, my service is still open. It's only about 75% full. Mm-hmm. I have it capped at 250 subscribers, because what I do is I give my subscribers a 24-hour notice before I buy anything. Mm-hmm. So, and some of these things are pretty illiquid. So make sure that we all kind of get in at the same price.
Right.
And it's rather inexpensive at $249 a quarter and $899 a year. Mm-hmm. And this is the time to, like I said, to come in and get into the best juniors. And I've poured over about 50 of them. I've done extensive, painstaking research in about 50 of them. And I've got, right now I own about 25, and I have a watch list of another 20, and I have some warrants and a few others. But I don't like to hold any more than that. So I pretty much placed my bets. And like I said, I do a lot of research on these companies. So that's the main thing. You just have to do as much research as you possibly can, because these things are very high risk and very high reward. So you get into a handful of them. All it takes is a few of them to take off, and you do really well. So the service has done really well so far. The portfolio began in 2016. It's up over 120% since then. And this year I'm about flat, but that's pretty good considering what the juniors have done. But it's getting ready. The sector's getting ready to take off. So it's a good time to get into as many juniors as you can, at a reasonable number, and just wait for the breakout to come.
All right. Well, hey, exciting times ahead for sure. Any questions or comments for David or myself? Email us, kl@kerrylutz.com. Tell us what you think the Fed's going to do. Person that gets the closest to their action at the June 19th meeting will get a free pre-1965 silver dime. Why not? It's worth a shot. KL@KerryLutz.com, Twitter feed @KerryLutz, Facebook page Financial Survival Network. Doesn't matter whether you are listening on a podcast platform or you are listening to YouTube. Please subscribe, like, and share. Really helps us a lot when you do that. It really helps me get the message out about people like David, who you might not otherwise come across in your everyday web browsing news ingestion cycle. David, it's always a pleasure, man. Thank you so much for coming on, and we will catch up with you soon.
Thank you, Kerry. Have a good one.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.